There's not going to be a position that's not going to get affected by AI.
If you're not playing around with it, if you're not interested in how it's going to change your job, you're behind. And so you should start looking into that now, no matter what you're doing.
What are some of the companies that you think should be already building an insights function, the types of softwares that you see like, hey guys, you're sitting on so much data and so interesting insights that you're not drawing out because you're not taking the time to dig deep and to actually build this function?
The company that I think I would love to read insights from that I haven't yet is Stripe. I would love to read Stripe's insights. I think that they could talk about literally like what is happening in the economy writ large, the digital economy, which is increasingly the whole economy. I think that they would have fantastic stuff. The finance cases are pretty obvious. Applicant tracking system and recruiting technology puts out wonderful insights about how long does it take to close a candidate? What are the various kinds of roles? How does recruiting really work on the back end?
There's a big data set of so many companies that they have a ton of information on because they collect that and they ask you to do a bunch of forms, whatever, and they have their revenue numbers, they have everything. There's also some regulation piece to this or privacy piece to this.
You need to be incredibly careful with customer data. We have the right to use this data and aggregate it in anonymized ways. It's in every single one of our contracts. If anyone ever wants to take their data out of it, it's an easy opt-out.
Welcome to the FounderVideo podcast, an interview series bringing you the latest and greatest info on B2B marketing, revenue operations, and go-to-market strategy from respected experts. Here is your host, Will Yuste.
Okay, so today we're here for the 29th episode of the FounderVideo podcast. We have with us Peter Walker, Head of Insights at Carta, famous for those beautiful infographics that you've been posting about VC and everything in between regarding the data you guys collect at Carta. And so the first thing I wanted to ask you, because at least in my feed, you've been pioneering this sort of insights function, right? And I took a look at your Substack and you've written about this already, but I wanted to ask you first, why do you think insights will become a common function for the best B2B marketing teams?
Yeah, well, thanks for having me on, man. I think, famous is probably too strong a word, but I am on LinkedIn a lot. So that is, that's fun or not nerdy or whatever you think it is. But in terms of insights teams, I think it's really just the next evolution of where content in a B2B space needs to go. And the reason for that, I think, is fairly obvious. One is everyone has sort of adopted the same playbooks vis-a-vis content. So it's getting much harder to stand out with something that isn't proprietarily yours. And the second is that I think we are rapidly approaching the maximum number of people who can tell personal stories about certain subjects or how they closed a sale or whatever. Like those will always have a place on social and other places. It's just not as riveting as the first time that you read someone really taking you behind the scenes. So this build in public aspect, I think it's run its course or it's close to running its course. It's becoming sort of a default path. Insights is different. Insights gives you a reason to speak to your prospects, speak to your customers, speak to interested people in your ecosystem and tell them something valuable that they wouldn't have otherwise known based on and those are only things that you can tell. And I think that's a really unique and customer aligned motion. Like one of the best things about insights is you're not really there to sell them on your product. You're there to make them smarter about the world that they live in. And therefore they're going to have this brand halo associated with your brand because you've already been helpful without ever asking for something in return. And that's really what insights is all about.
How did you start this at Carta, by the way?
So I came into Carta about 4 years ago and I pitched this job to our then chief marketing officer, who's a wonderful woman. And it was 2021 and everything was up and to the right. And it felt like startups were gonna, take over the world. And so I think that they were just ready to, Carta was, I've been really lucky to have a leadership team, both her and my current CMO, Nicole, who have really believed in this as a motion. And it does take executive buy-in. There are companies for whom the idea of aggregating all the data that they have and then putting it back out into public for free would be a scary idea. It's not the case that everyone would be immediately on board with that. So the executive buy-in was really, really important. And then it was just a sort of experimentation to see what worked and what didn't. I had been coming from an experience at the Atlantic magazine where I helped run their data visualization for COVID tracking. And that was an MBA, I would say, in putting out data at scale every single day with a ton, as you can imagine, in the middle of COVID, a ton of feedback, a lot of very strongly held opinions about what is good to do and what is unfair and what is right and wrong. And so it just kind of bubbled up that if you are a B2B company that has a unique data set, this is one of the ways that you can mine that data without having to charge people for PDFs or something that feels very old fashioned.
How is this different from call it demand generation, or just doing something that educates the prospect on not just the world that they live in, but the problems you're solving and the value proposition? How is that linked to the pain points? How is insights different? I take it the main gist is the fact that it's backed by data, and that data is usually or should be proprietary. But I think, well, correct me if I'm wrong, but it seems to be something a little bit even more detached from the value prop, so to say, and it's more so about giving the insight within the industry from kind of an expert-driven conversation, so that they can start riffing on that and therefore eventually talk about your product, right?
Yeah, I think you nailed it. I wouldn't say it's entirely divorced from like old forms of content marketing or demand generation. I would say two things sort of set it apart, though. The first is, yes, proprietary data. So this is not blog posts based on, the best practices on sales calls or whatever. This is going into your own databases, finding the interesting stories of those that bubble out of those, tables and spreadsheets, creating good looking graphics. So data viz is a big part of insights. Can you create graphics that are immediately shareable, that people download? One of the things that I wish I could track, one of the success metrics for insights that I know is happening, but I can't track very well, is people taking screenshots of the graphic and sending it to people in WhatsApp threads or Signal threads or whatever. I know that's happening because I see people get in touch with me all the time that say, oh, I found this on this kind of, personal group chat. But that's what you want. You want something to build something so good that they have to snapshot it and send it to their friends or send it to their fellow founders because they just want to spark a conversation. So that's one, proprietary. Two is, and I think that this is an opinion that I have. I don't know if it's exactly a rule of insights, but I do not have a lead generation goal. I am not here to sell you anything. I'm here to make you smarter. So as that is an orientation, yes, of course, we have tons of different ways where we get you into pipelines and we want you to be a data subscriber to virtual events, webinars, our newsletter, live events that we do, YouTube shorts. Like there's a ton of different channels, but I am not held to a lead generation goal. And that sets me apart from sales or like other demand generation teams, and that my only goal is to increase brand awareness and love for Carta in the ecosystem. And it's actually really surprising how just that little change in the orientation really matters, and it sets you up to be something of like a public face for the company, which has been a bit of a surprise, to be honest. I wasn't expecting that when I first came into the role.
Do you like it, or is it?
It's great. It's great. When I first came in, I was like, okay, I'm going to be a data nerd behind a desk, ripping through a ton of data sets. Like I write SQL, I'm fairly technical, etc. And now I spend 50% of my time talking, podcasts, conferences, private dinners, whatever. Like you're just kind of always in the data. And then once people know you for the data, they want to bring you on and ask you about what's happening in the world. And that's awesome. I've really grown to love it. It was just, completely unexpected at the beginning.
No, that's nice. That's nice. So you said the first pillar is proprietary data. Should a company try to even think of building an insights department or function if they don't have proprietary data with their software?
I'd say it's probably not worth the time and effort, to be honest. Of course, there's kind of two other things you could do. One, you could be a curator of data that already exists in the ecosystem. So other people's data that you are either refashioning into your own charts or like republishing in some way. It doesn't have the same impact, to be honest. The second thing, and this is something that people have done for a long time, is surveys. I have strong opinions on surveys. Not necessarily because I think the survey itself is bad, but because I think the data from those surveys has been misused in a lot of ways. And if you dig into those marketing reports that published on the, state of whatever, and it's a survey-based data set, and you get to the methodology section and it's like, oh, we asked 600 people and 250 of them responded. Like, how useful is that really to me? I don't find it that fascinating. And so if you have even just a touch of your own insight, and look, I'm not saying every B2B company is going to build an insights function, but I think a lot more than you might necessarily expect have proprietary data. Even in the time that I've been doing this at Carta, we've seen other insights teams pop up. The one at Ramp is fantastic. There's some at Live Data Technologies. I know the Brex team is thinking about it. I know Zuora has an amazing subscribed institute where they go into tons of detail on insight stuff. So I think a lot of companies have the ability to do it. It's just whether or not it fits your go-to-market motion.
Mm-hmm. Okay, so two things about the insights function as well. You mentioned the executive buy-in. What was the initial reaction from the chief marketing officer when you first started or proposed this at Carta? Did you face any friction? What were the initial goals? How was it presented? Can you touch a little bit on that?
Yeah, so when I came in, the idea, again, the sort of channels have evolved and the sort of public nature of it has evolved a little bit, but the core idea was the same, which was Carta sits on top of this amazing data set about what's happening in private markets for startups and investors. We should be the trusted source of information about what is real in the market. And to be clear, that market was not empty, right? You had PitchBook, CB Insights, Deal Room, et cetera. There were a lot of other players, data players, not comparable companies to Carta, that were putting out data into this ecosystem. But we heard constantly from founders and investors when we got into the business that they found themselves making decisions and they didn't feel good about the data they had. They didn't understand what was going on at the early stages of the market. They didn't think the data was very specific. They thought it was too opaque or too general. They didn't think it asked questions that were germane to what the topics of the day were. What are seed stage valuations? Sure, you can go and look that up in 4 or 5 different places. How to use a SAFE? What is going on with employee equity? What should founders expect in terms of dilution? That was basically impossible to find. So that was the core insight that we had at the beginning. And the executive buy-in, I think for folks who are trying to build their own insights teams, what I would say is narrow the scope at the beginning. So don't try to chomp off the whole of the data set or the whole of the company's work product. Focus on one part of the business that you think customers are asking questions that we should know the answers to. That's probably the place to start. And then you can build, your trust and relationship with other teams as you go along, which again brings us to the other point. When should you think about starting one of these teams? I've had people I spoke with a founder who's a founder of a YC company 3 days ago, and they're still in the batch and they're thinking about starting an insights team. Is that the right play? I think maybe if you have a lot of data already, yes. It really just depends on where is your comfort level with the data that you have, and do you have time and effort to devote to this? Because it does take a little while to spin up. This is not a marketing motion that you can just get going in 2 weeks and expect really significant results.
And do you look for a tie in between the data that you're going to be presenting and these stories that you're going to tell with that data, and how that solves not only, you were mentioning we're sitting on a data set that's super powerful to answering questions that users are asking, right? Those were current users. How about the new market that knows about Carta firsthand from the data that you're presenting? How do you tie that then into the product marketing narrative, for example?
Yeah, it's a great question. It takes a lot of different forms. We do produce content that is aligned to company goals. So if we are building a product, a good example is we built a ton of data at the beginning when we were putting out our launch product. And launch for Carta is free cap table until you raise $1 million. So very customer aligned, a really wonderful product for us, and fits very neatly into the insights motion, because who are the founders who could use launch? Well, they are very young, really nascent startups who are just getting started. So what kind of things are those people asking? They're asking, how do I get in touch with pre-seed investors? What is the market for pre-seed valuations? How do I hire my first 10 employees with equity? Those are all questions that insights can answer. So as the launch moment was ramping up, we were putting out seeding content in the ecosystem about here's what early stage founders should be looking for. you have wait lists, et cetera. Like if you tie in insights to a product launch, it can fit really, really neatly. The other ways that you might do it, and this is, I think, probably the core sort of funnel mechanic that Insights has, is you want to convert someone from a rented viewer to an owned subscriber of your data. So we all know rented audiences on social, owned audiences on newsletters, podcasts, et cetera. And then you hopefully can convert an owned audience into an interested buyer for your software. For Carta, an owned audience is, most people, might follow me on LinkedIn. They see some graphics. They say, oh, Peter's putting out interesting stuff. I'm going to follow him on LinkedIn to begin with. And then when I get really interested, I'm going to subscribe to that Data Minute newsletter where we have 36,000 subscribers now. And then I'm going to get that every week. And once you opt into that newsletter, the chances that you attend a virtual event for us, that you do a product demo, et cetera, those are just many, many times higher. So again, we're not just forcing you, oh, you looked at a graphic, go buy our software. We're inching you down the path of, here's more information that you find valuable. Make sure that if you are ever going to start a company, Carta as your cap table is just immediately to the front of your mind. We are never not in the consideration set for new founders. And then we can talk about other products and other ideas that are useful for you.
Love that.
This podcast is brought to you by FounderVideo.com, a LinkedIn ads agency and go-to-market consultancy. Increase your brand authority and reduce your cost to acquire a customer with a holistic content marketing narrative, signal-based selling, and natural-looking ad creatives that prospects actually want to consume.
You got to build a whole journey across the consumption of such data, and first go deeper into own channels to then tie that down back to the product marketing narrative.
And I think Will, like one of the biggest points that people I think mess up here is that they jump towards MQLing or lead gen way too fast. Like just because someone read something that you posted on LinkedIn does not mean that they want to buy your product. In any way, shape, or form. It means you posted something interesting, which is good. That is a good in and of itself. The easiest way that I see this is I see people on social channels always, throwing UTM'd links to pages on their website into their posts. When you do that, you kill the reach. By definition, you make fewer people read your stuff. So you need to have a sit-down conversation with your leadership and say, look, I am not going to kill my reach, our reach, in order to prove value from a specific LinkedIn post. I don't actually care about that. The goal is to have a system of content creation where I'm consistently putting out really great stuff. So whatever one graphic is not worth tracking. Track stuff on a much more macro level.
Yeah, I like that. Also, I was about to ask you as well. You mentioned lead generation. You're not tied to when it comes to the performance of the insights function. What are some of the metrics or indicators that you look at to understand whether you're being part of the conversation, whether the insights are getting shared? As you mentioned, right, like snapshotting that and sending it to a Threads or a Slack channel, you don't get visibility over that, right? But I bet anything if you I don't know if you scrape the sales calls to understand, where are they coming from, or signups of what you mentioned, the launch product. But tell me, how is that measured? Yeah.
Yeah, all of the above. There's a ton of different ways. I think the basic metrics are the ones you're familiar with: impressions, reactions, followers, all that kind of stuff. Those are basic. Those don't actually matter that much. All they do is give you a direction of up or down, right? So if your follower count is changing, it doesn't really mean that much for your business. It just means that you're becoming more prominent, which is a good thing. That's something to shoot for, but it's not something to over rotate on. Better metrics. So increase in the number of data subscribers, which we define as newsletter subscribers for our Data Minute newsletter, attendees to data events, be they on LinkedIn or webinars, and then attendees to live data events, speaking engagements, et cetera. So you add all of those up and it gives you a number again, and you're just kind of looking to gradually increase that number over time. Some of the ones that are a little bit more specific. So if you want to get to the bottom of the funnel first, I think the best way to judge the impact of insights is just to ask people, where do they hear about Carta, right? The basic question at the end of when they signed up for a demo or talking to a salesperson. If you're doing it right, very rapidly, it'll be like, oh yeah, I read something on LinkedIn. I saw Peter speak at this thing, whatever, or one of our fellow insights team members. The last one, maybe a little bit slightly harder to track, but I think very useful, is just inbound questions. So inbound DMs on LinkedIn, inbound DMs on X, inbound emails, so many things really, where if you're doing your job right, people will find you and they will ask you questions about your data. They will say, hey, Peter, I saw that you posted about seed stage valuations. Thanks for that. That's useful. But I am a biotech company, and it seemed like you were talking mostly about software companies. Can you give me the biotech version of that chart? I get that every single day. I get that probably dozens and dozens of times a week. And that is fantastic. It means one, people are reading your stuff closely, and two, they think that you are trusted enough that they want their own more specific slice of whatever you did. That's really how you know your audience is engaged. And the advantage of that one is that can start happening when you have 1,000 followers on LinkedIn. You don't need to get to a huge scale to start seeing the trickle of inbound requests.
Yeah, and it also speaks volumes about the demand of content that the market is asking for, right? Like if you see a lot of people coming from biotech, like, hey, we're missing data on this. You're always talking about software or whatever. You may, look to publish something about that, right? And so, in that note, when compelling these stories and putting together these infographics, I've seen some of your content about data visualization and whatnot, and that's super interesting. And I don't think it's that hard to play with. Like you just got to have the right template and to put together the images. But when it comes to the correlations of data and the story that's being told, because you don't only post an infographic, you also usually comes with a large text where there's bullet points, insights, conclusions, key takeaways, that type of stuff. What are the correlations that you look for in the data to tie with the narrative? Do you have a certain narrative plan that you need to touch on, and then you go to the data to find for those, to look for those infographics that can sustain the narrative, or is that the other way around? How does the workflow work there?
It depends on the, honestly, it depends on the day. There's a lot of different ways that this works. In the beginning, to be honest, I wasn't really trying to match I wasn't trying to pick a narrative out of the general conversation and say, like, does our data support or contradict that? I was just trying to find the most interesting stuff in our data that I've been asked for. So you pointed out a really huge advantage of Insights is that the feedback loop is very, very quick. You post something, you get comments, you get reactions, you get questions, and then it feeds your next thing. It is a beautifully aligned motion in that way, because your content will get better as your audience grows if you're doing it right. If you're looking for more specific things, sometimes, as I mentioned, you do tie them to company goals. So we know that we're going to put out X product on this date. Cool. In the advance of that, can we build reports on that kind of adjacent product suite that we have, or insights around that job to be done, whatever it is? That makes a lot of sense. The one note that I would have for anyone trying this motion is that you should not be building big quarterly reports for a long time. Don't waste your time building huge PDFs of 25 slides and big charts and whatever. Just build one graphic. The atomic unit of Insights is the single graphic. And if you are not putting that graphic out into public and getting feedback on it, you're doing it wrong. Just start posting stuff. Just start making charts. As you mentioned, there's 1,000 ways to make charts. It's not that hard. And when you get templates, you can move it to a system really quickly. I see so many folks who want to spin this up, and their initial inclination is to be like, we're going to build a big quarterly report and put a lot of like paid media behind it or something. Do it the exact opposite. Start very small, figure out what your audience truly wants, and then build your lead magnets from things that you already know work.
Yeah, I love that. Then you put it all together in that quarterly report. But that's the type of piece of content that embodies so much that nobody's going to go through it all to find the stuff that they're interested in. You gotta
100%. The other point is, like, big quarterly reports. It is probably part of the function of Insights that you are consistently producing good research, and you want to bundle that research up and put it out in a way that makes sense. I do find that, we put out state of private markets, state of fund benchmarking. There's like 4 or 5 different reports that we put out on a regular basis. Those are very useful. They do get a lot of downloads. Like it's a great motion, but they really serve as sort of the fodder for the rented audiences on social. Like, I'm taking a bunch of charts from there, mixing them up, putting them out on social, and pointing back to the single report. Where we found actually more aligned motions is, once you put out a bunch of charts, you find the 3 or 4 that are just fascinating to your audience that really spiked for some reason. And then you build a specific special edition of a wider insight set on that topic. So perfect example, whenever we put out data on how much equity founders actually own, it blows up. All these founders are super interested in it for fairly obvious reasons. It's their own compensation. And so we put together a founder ownership report at the beginning of this year that shows them how their ownership changes over time through venture rounds and all this kind of stuff. Best report we've ever put out, most downloads, et cetera, because we already knew it was going to work. We already knew that people were super interested in this information. So then you just package it up as a nice little bow, and hey, you've got yourself a really great lead magnet.
Love that. You just gave me the perfect intro to ask you about ownership and equity. As per Carta's data, investors have a median ownership of 49.2% post Series A. What do you think this says about the current state of the VC landscape? And you mentioned that report blown out, and every founder is interested in this. It's not looking that good, right?
I honestly think that a lot of this is just a little bit of misconception about what VC actually is and whether or not your company should take it. It's a massive choice. And in some ways, I'm happy about the current moment because more and more founders are looking up and saying, I want to build a fantastic business. It just doesn't need to be VC backed because the ownership doesn't make sense for me. The growth goals don't make sense for me. And candidly, the financing doesn't make sense for me. So there's a lot of companies out there that can build amazing businesses that are tech businesses that do not need venture capital. Having said that, there are a lot of businesses for whom venture capital might make sense as a part of your journey. And there you need to be very up to date on what investors will demand from you. And the investor demands for venture-backed companies are incredibly high. They're high in terms of dilution, which is 2 institutional rounds in, your seed round and then your Series A. You as the founders will own probably less than 50% of your own company. That's a big deal. 2, you're going to need to grow really damn fast. If you are not committed to growing not 20% a year, but 100% a year, at least for many years to begin the business, you should not be in venture capital. It just doesn't make sense. The fund economics don't make sense. It doesn't make sense for the founders. And that doesn't mean you're building a bad business. It just means you're not building a venture capital business. And that's okay. So knowing all this market stuff going in gives you a much better idea of, is the company I'm thinking of building right for that financing model?
Mm-hmm. The last question I have another one about it. We can talk about on and on startup equity packages, but I want to move this one up because I think it's really timely. You just were mentioning, right, that there's a lot of founders that are understanding that they might not need VC, and it's becoming easier and easier to get a revenue per employee that before was only to be seen at Amazon or Microsoft, something in the lines of 400K, 500K, 1 million revenue per employee. And don't even get me started with evaluations, right? We got companies like 11, like there's companies that are having a valuation of $1 billion per employee and more, right? And that's kind of crazy when you think about it. And I think this new 20 billion fund from A16Z speaks volumes about the direction that VC is going and how they're all approaching. I mean, at the end of the day, even General Catalyst as well, they're shifting away from this positioning of being just a VC firm, but rather it's more of a private equity firm now that can do buyouts, that can turn around companies, that can implement AI and whatnot. Where do you think VC is going after all the data that you've analyzed at Carta? Like, is it now branching into? Because for me now, I see there's fintech, high tech, and other hard stuff and big stuff that needs the help of those massive mega funds. Whereas there's also a bunch of other AI projects that are specialized, vertical, that don't need that much money and are not going to become that big either, right? It's almost as if it's 2 branches of VC now. What do you think about this?
Yeah, I think it's sort of the evergreen conversation around venture. And I think it boils down to one thing, which is the words venture capital used to mean something very specific. It was early stage capital for adventurous business, right? Business that traditional loans from banks, et cetera, would never touch because it's too risky. But the upside was great enough in those situations that it made sense for some form of capital to come along. And that's where the venture model came from. We're going to take a lot of bets. Most of them are going to fail. The ones that work are going to work so well that it's worth our while. I do agree with you. I think venture is splitting into 2 or even 3 or multifaceted venture capital now, because some of those funds have gotten so big that they are effectively institutional asset managers as opposed to simply venture capital funds. So yes, they could play at early stage VC. They can do PE growth buyout. They can do, in General Catalyst's case, I think they're having a wealth management arm as well. That sounds like, Blackstone. That sounds like a ton of different asset managers that have just grown out of their initial asset class to go play in other asset classes. Much respect to them. If you can do it, hey, it's a fantastic business. What it does, though, is it does suggest to founders that they need to be more specific about the kinds of capital that they want in their business. So you've got bootstrapping, where no VC, just take what you have in the bank plus your revenue. That's how you grow. You've got full VC, pre-seed, seed, Series A, Series B. I'm going to take a little bit of capital at every one of those stages. I'm going to try to get to the billion, or even at, honestly, these days, $5 billion outcome. Then you've got seed strapping or venture light, where you say, I'm going to engage with VCs once, pre-seed, maybe seed, something like that, get $2 to $3 million in the bank. And then I'm going to try to see how far I can get with just that amount of capital. Can I get to profitability with that amount of capital? And then can I enjoy my own sort of growth path beyond that? That's talked about a lot these days. I think it's happening, but I don't think it's happening nearly as much as it is being spoken about. I think a lot of founders are going to end up saying, oh, actually another round would be nice. I could use that money in certain ways. So we'll see exactly what happens there. And then you've got really cool examples of bootstrapped companies that built fantastic businesses. And then 7, 8 years later, they look around and they say, I have an opportunity to supercharge my growth. I'm going to engage with VCs now at a later stage. So I'm going to skip all the early stuff. All of those paths are available to founders. The difficult question is, which kind of company are you? It's really hard to know upfront what sort of capital needs you are going to actually have to achieve the goal that you have. If your goal is, I want to build a company that's worth $100 million and is a beautiful, spits off cash, probably don't take VC. If you're trying to build $1 billion company, if you're trying to IPO or be a $10 billion outcome, if you're trying to challenge, OpenAI or Anthropic, you probably need some VC money.
Right. And from all the components that you've been dropping insights on, what are some of the things that you would look at as a founder to understand what bucket are you in, and then better understand what kind of capital do you need and in what stages and what percentage of equity, that type of stuff?
Yeah, I'd say the first thing is actually look internally and say, what is the ambition level with this company for me? So for instance, if you are sitting there as a founder and you're saying, and this is part of the sort of Silicon Valley YC dogma in many cases, if I get to $100 million outcome, I'm going to be really disappointed because that's far too little for me. That's the first question you have to ask. If that's true for you, you probably are okay taking VC money because you're only playing for the biggest outcomes. And then you look at your business and you say, what is my level of confidence that this business can get very, very large? If you are not confident at all about that, but you just are interested in this idea and you want to see where it goes, I would say probably avoid VC for as long as you can, maybe take some angel money, et cetera, and build the product, get actual customers, and then you start putting venture capital on it. Honestly, even if you are sure that it's going to be a big business, I'd say if you can avoid VC at the very beginning, build something where you actually have real traction and then go and engage with them, you're just going to get a better deal, right? You have more negotiating leverage in that case. So that's a useful path to begin with. Then you get into things like, how big is the market? What is the actual monetary value? Could I get to break even or profitability soon in this business? We could talk about how AI is changing all of those assumptions, et cetera. But then you're into more standard business case details. The first question you have to ask yourself is, how ambitious am I as a founder?
Totally. Why do you think the hardware, fintech, medical devices, pharma, and biotech are some of the fastest growing sectors in VC these days?
I think that there's just been a return for many VCs to the idea that VC as a model is actually really good at building things in the real world. It's probably felt for the last 10 years or so that a lot of VCs, with good reason, got fascinated by SaaS and they were building digital products that had zero marginal cost, et cetera. Whereas, to be honest, you can make a case that VC is actually best suited for building real world products that other people won't fund. So biotech, med devices, hardware, robotics. I think the explosion of AI has also, it's been exciting on the software side, but it's also really exciting to people on the hardware side, where we could say we could change the way we manufacture things. And that is a perfect use case for VC. I got to be honest, though, there's not a ton of VCs with deep industry expertise in things like robotics, hardware, etc. So there are far more VCs who are very well versed in SaaS go-to-market than there are in robotics and hardware. So if you're a founder in those spaces, VC might be the right capital path, but you got to make sure you're picking the right ones.
Yeah, just make sure you go to a mega fund or something that has already been hiring engineers. And
not always the mega fund, but certainly you want somebody who can speak on your level about the challenges that you're facing.
Off topic, but I got to my mind. Mark Anderson recently said that with AI, one of the few jobs that will stay in place will be to be a venture capitalist, right? Because you need a lot of taste and whatnot. What is your take on that?
I mean, I hope he's trolling. I hope it's just I hope he's just trying to get people riled up. Who knows what kind of jobs are going to be available. I know VCs. I know multiple VC funds who are trying to automate themselves out of a job right now and are doing deal sourcing and diligence and calls with founders and everything through AI products. So no, I don't think VC is some sort of special holdout from the advance of AI.
Interesting. We'll see how it goes. But I think there's not going to be a position that's not going to get affected by AI. I think that's
100%. Yeah, if you're not playing around with it, if you're not interested in how it's going to change your job, you're behind. And so you should start looking into that now, no matter what you're doing.
Related, how are you using AI yourself for the infographics and just your day-to-day at Carta, building insights and whatnot? I bet, you go way more rapidly now, right?
I do. I think the place that I found it to be the most useful on the insight side is just actually the ideation phase. So feeding some data to like internal AI systems and having it spit out 40 or 50 different chart ideas and like with different ways to think about this data, outlier analysis, et cetera. It's been really helpful. Writing obviously is another place where that could be useful. I candidly haven't used it as much to write. I am consistently annoyed by the level of writing that I see in LinkedIn comments and LinkedIn posts that is just AI driven. I'm not saying you shouldn't use AI to write. I'm saying you shouldn't use it and then not edit it because some of that is just so bad. And I don't know why. AI is actually pretty good already. We don't need to make it look worse than it is by having these comments that are just completely inane. So I wish that was stopping. But there's a lot of different ways you can use it in your workflow. The other thing that we've been doing is, using it to add data dimensions to our data that we wouldn't have. So a great example is on the Carta side right now, we have the state and then the city of the location for the startups that are on the platform. But city is sometimes too coarse a thing, and you want to actually aggregate it up to like metropolitan statistical area or zip code, et cetera. AI is fantastic at like re-aggregating your data and adding new columns of information to those things so that you can cut your information in different ways. Little stuff like that has been really helpful.
Interesting. Let's open up the box about startup equity packages. How can employees and founders as well, because they need to design these, how to gain clarity over them to not be misled on each side? What are the questions that employees should be asking to get the right info, apart from asking, of course, about the options themselves and their actual value and time and when are they going to be available? But
yeah, it's a good question. And I got to be honest, it's not something where every time the candidate is going to get all the information that they think they deserve. There are some companies that are just they keep that information very close. And even if you ask the right questions during an interview, they're not going to give you the answers. You can have your own opinions about whether or not that's a company you want to join. I'm just stating it as a fact. Like, it's not always the case that employees can find all this info. So you are applying for a startup job. You have two components, big components of your compensation package. The first is the salary. That's obvious. The second is the equity piece. if you are at a startup and the only thing that you know about your equity is how many shares I got, so my offer is for 10,000 shares, you don't know anything. You have no information really. And the reason is because you don't have a denominator for that information. So you don't know if that's 10,000 shares out of 100,000 or if it's 10,000 shares out of 100 million. And so you don't know really anything about your equity package. The questions you need to ask: what is the strike price on these options? So like, what am I going to end up paying for these options if I ever going to exercise them? What's the current preferred valuation of the company? Has the company taken on any structure in its financing rounds? So are there a bunch of investors who get paid out before me, is effectively what you're trying to ask. And then you can talk about what's our future idea about fundraising, what are the paths towards liquidity? Is this company the kind of place that's going to run secondary offers, or is it really just shooting for an IPO? There's a ton of questions, but just know that if you are trying to negotiate on equity, it pays to have some of this market data at your fingertips so that you can come in with the good questions to ask.
Now, of what I have planned for the podcast, I wanted to ask you as well. From all the comments you receive and all the reactions and inbound DMs that you've probably gotten from the infographics and whatnot, what are people having been interested most in from all the data that you publish at Carta, and what are some of the insights that you've drawn from that you were not expecting to receive from the market?
That's a good question. I mean, the stuff that is the most highly trafficked content, I'd say kind of falls into two broad buckets. The first is data that is about the market right now. So what are valuations by stage right now, round sizes, dilution, et cetera, so that founders can take that and literally go, I know that founders have done this, go into meetings with VCs that day and say, hey, I know what the market is. Those get a ton of play. The feedback to those is always, I love this. And can I get it for my sector, my state, my location, my kind of company? Can you make it more specific? So that's something we're working on. I think that's a good push for us to make it a little bit more interactive or searchable for, readers and customers to begin with. Then there's the stuff where people are in violent disagreement with some of the data. So what's a good example there? We put out some data recently that if you're a VC, and you're doing a bunch of bridge rounds, especially bridges that use convertible mechanisms instead of price bridges, which are two different kinds of bridge rounds, you're probably wasting a bunch of money. That I got a lot of angry DMs about that from founders who were like, stop putting that out because now VCs are less likely to do bridge rounds, and from VCs who say, you're not looking at this the right way, X, Y, and Z. I love those DMs, especially when the people are, engaging respectfully, but even the not respectful ones, if you spark a nerve like that, then you can go and dig into more data, right? Am I being intellectually honest about this? Did I get this thing wrong, et cetera, et cetera? And it's so useful. It's great to see what actually matters to people. And so there's been a number of different examples where you go back after there's been a big spark from something you put out and you say, okay, what's the next thing to put out in this subject? Or did I get this wrong? And sometimes I have gotten it wrong, and that's okay. You got to put out the next thing.
Interesting. Yeah. And out of all the ones that you've published, I'm sure you cannot recall all of them and kind of make a tier list or anything, but what are some of the insights that you've published that you've encountered to be the most interesting to you, regardless of the market's reaction?
To me, there's a lot of stuff. I find our compensation data super fascinating. We've got all this information about what startup employees are being paid in equity. And then we have this product, Carta Total Comp, which allows companies to hook up their HR system so we can see what people are getting paid in salary. And then we can give them, what is the market? If I'm hiring a level 5 engineer in San Francisco, what should I pay this person in both salary and equity? It's an awesome product. One of the biggest things that I had a misconception about when I came into Carta was that, one, it kind of seemed to me obvious that people should be paid the same amount for the same job, no matter where they live. And that is not true at all. People are paid wildly different things for the same job, depending on where they live. And then the other point, which is, well, if there's a really high inflation, shouldn't employers raise their salaries of their employees to take into account the fact that inflation is going up? And that is also not true. So like I learned a ton about cost of labor versus cost of living and like the ways that recruiters and firms in this ecosystem make choices about compensation. Love that data set. Really cool and fun and interesting stuff there.
Super interesting. Super interesting. I mean, I wish I had more things to ask you, to be honest, because you've gone through all the questions really quick. But I think that go ahead.
I have one. I think I have one point of advice for maybe to leave folks with who are thinking about building insights teams. And this is something, again, that I did not expect when I came into Carta, but has proven very true, which is it's pretty much impossible to build an insights team from the company account. It's got to be a person. And it can be multiple people, totally, but it needs to come from people. And there's two reasons for that. One is just the obvious reason that the algorithms on social kind of favor people over brands these days. The engagement is different, the comments are different, all that stuff. The other is because if this thing takes off and your insights kind of grows in prominence, having someone to go and do the in-person talks or, you know, jump on a pod or like be involved in the ecosystem as a face is very useful to your brand. And so that's maybe the other piece of executive buy-in that you need is, hey, not only are we going to put out this data, but I personally am going to do it a lot from my social accounts. I'm going to, you know, be a bigger part of this marketing team. It's just so helpful. I mean, there's so many examples of times where people will DM me things about their, you know, worries about their current contract or, you know, stuff that they don't feel comfortable talking to their customer success person about, but you're just like a slightly bit different kind of person in the organization. And so if you can have that trust as an actual person, it really, really helps the company. So if you're not willing to do that as like a prominent public person, then insights maybe isn't the right role.
Love that. Yeah. And to wrap up, what are some of the companies that you think should be already building an insights function, like the types of softwares that you see like, hey guys, you're sitting on so much data and so interesting insights that you're not drawing out because you're not taking the time to dig deep and to actually build this function. What are some of, if you want to bring examples as well? Yeah.
Sure. Yeah. So I mentioned a couple of teams that are doing it that I deeply respect. So Ramp, first and foremost, has done a fantastic job of building it. They actually went even a more technical route. They hired a real economist. His name is Ara, and he's fantastic. So there are companies like Ramp who are doing it, companies like Live Data Technologies, companies like Claim is a startup that's doing some of this that I really love. There's Zuora is fantastic at it. There's a bunch of people are trying it. The company that I think I would love to read insights from that I haven't yet is is Stripe. I would love to read Stripe's insights. I think that they could talk about literally like what is happening in the economy writ large, the digital economy, which is increasingly the whole economy. Like I think that they would have fantastic stuff. So if anyone's listening from Ramp, I would love to read your stuff and hopefully that happens. But there's a ton I mean, the finance cases are pretty obvious. I think that even non-finance cases, a great example of a team that has put out insights that you might not expect. Ashby, which is an applicant tracking system and recruiting technology, puts out wonderful insights about how long does it take to close a candidate? What are the like various kinds of roles? How does recruiting really work on the back end? Super fascinating stuff. A subject I had literally zero information on before, and their insights team has educated me, and I feel much smarter about that now. Like a lot of companies could do it.
Stripe is a good take. Mercury would be a good one as well. I think, you know, those
would love
companies
to see
they
Mercury.
have.
Totally.
There's a big data set of so many companies that they have a ton of information on because they collect that and they ask you to, you know, do a bunch of forms, whatever, and they have their revenue numbers, they have everything. If only, I mean, I'm assuming it's also, I haven't asked you about this, but there's also some regulation piece to this or privacy piece to this, right?
Absolutely. I mean, you know, if you're a bank, this is definitely going to be harder because you have much higher regulations, et cetera. The other point, though, is that you need to be incredibly careful with customer data. That goes without saying, but maybe I should have said it earlier. We have the right to use this data and aggregate it in anonymized ways. It's in every single one of our contracts. If anyone ever wants to take their data out of it, it's an easy opt-out, like, of course, one. Two, we have then editorial standards over and above the legal standards where we say we are stress testing this at all times to make sure that no one can look at anything that we produce and work their way back to an individual company. That's the whole point of aggregated and anonymized. So those are two foundational aspects which sort of set your insights apart, and you got to make sure you're treating the customer well up front.
Totally. Well, it's been a pleasure, man. I think this was really enlightening. I mean, we covered a lot in little time, but I think for anyone trying to build out an insights function, trying to understand how you guys have been doing this at Carta, and just some interested or curious in some other VC insights that we dropped as well, I think it was a really nice episode. So yeah, it's been a pleasure. Thanks for being here, and hope to have you back at some point.
Absolutely, man. This has been fun. Thanks for having me on.
Yeah, pleasure.
Thank you for listening to the Founder Video Podcast with Will Yuste. See you on the next episode.